Welcome to our video discussing the collapse of Credit Suisse. Credit Suisse was once considered a powerful banking institution, but in recent years, it has been hit by a series of scandals that have led to its downfall. In this video, we will explore the reasons behind the bank's collapse, the consequences for the global financial system, and the impact on its customers and investors. Credit Suisse's troubles began in 2015 when it was fined a whopping $2.6 billion for aiding U.S. clients in evading taxes. This was just the beginning of a string of scandals that rocked the bank. In 2016, Credit Suisse announced a restructuring plan that included cutting thousands of jobs and scaling back its investment banking operations. However, these measures were not enough to address the bank's underlying issues. In February 2020, Credit Suisse's CEO stepped down after the bank reported a massive loss of 1.53 billion Swiss francs. Despite these measures, Credit Suisse's troubles continued. Between 2017 and 2021, Credit Suisse joined with Greensill Capital to offer funds that invested in company supply chain finance deals. Greensill relied on loans provided by specialized supply chain investment funds managed by Credit Suisse to finance its activities. However, Greensill's insolvency on March 8, 2021, ultimately led to Credit Suisse freezing and winding down a $10 billion group of funds marketed to clients as safe investments. 2 weeks later, on March 26, 2021, Credit Suisse suffered massive losses due to the collapse of a U.S. hedge fund, Archegos Capital, which cost the bank an additional $5.5 billion loss. The bank's failings also included a criminal conviction for allowing drug dealers to launder money in Bulgaria in June 2022. Entanglement in a Mozambique corruption case in which Credit Suisse agreed to pay about $475 million to British and US authorities in 2021 to resolve bribery and fraud charges. A spying scandal involving a former employee and an executive, and a massive leak of client data to the media in 2020. These led to the resignation of several top executives, including the CEO. March 2023 saw the final indignity. The U.S. Securities and Exchange Commission queried Credit Suisse's annual report, which worsened investor concerns about the bank's stability. Panic spread after the failure of regional U.S. lender Silicon Valley Bank, which underscored how higher interest rates were eroding the value of the banking industry's bond holdings. Investors began ditching anything that smelled of banking risk, including Credit Suisse's stock. As a result, Credit Suisse's stock slumped as much as 31% on March 15, 2023, when the chairman of its largest shareholder, Saudi National Bank, ruled out investing any more in the company. The bank's shares continued to plummet despite securing a 50 billion Swiss francs emergency loan from the Swiss National Bank just days earlier to shore up its liquidity after a week of panic. Swiss authorities scrambled to find a more sustainable solution. Over the weekend of March 18, 2023, they forced the bank into the arms of its local rival, UBS, for about $3.25 billion. Less than half its market value on Friday, March 16, 2023. UBS has been expanding its wealth management business, and the acquisition of Credit Suisse's clients gave it a significant boost. This move solidified UBS's position as Switzerland's largest bank. The collapse of Credit Suisse has resulted in significant losses for its customers who had invested in one of the bank's riskiest investments, AT1 bonds. This has led to legal action against the bank and increased calls for greater regulation of such investments. The collapse of Credit Suisse has highlighted the risks associated with investment banking and emphasized the need for greater regulation in this sector. Furthermore, concerns have been raised about the stability of the global financial system and the potential for contagion. This event has had far-reaching consequences for the banking industry as a whole. While the bank's collapse can be attributed to several factors, such as poor management and risky investments, it has brought to light crucial questions regarding the regulation of investment banking and the overall stability of the global financial system. As a result, the banking industry may undergo significant changes to prevent similar incidents from happening in the future. It is important to note that the collapse of Credit Suisse is a significant event that has long-term implications, not just for the bank but also for the entire financial industry. It is therefore crucial for the governments and the banking industry to learn from this event and take steps to prevent similar incidents in the future. Thank you for watching. Please help us to like and subscribe below to enable us to continue creating more useful videos for you. Till the next time, ciao.